This is CNN Breaking News.
And we begin this hour with breaking news. President Trump's tariffs and their fallout fueling a lot of pessimism about the U.S. economy. We'll take a closer look at that grim new report in just a moment.
Yeah, and that anxiety has really weighed heavily on Wall Street. You've seen it these last several days. Stocks are just struggling to end the week in the green, just hours after China made its latest move in the trade war. CNN's Matt Egan is in New York. So, Matt, walk us through this new consumer sentiment report, these numbers and what they mean.
Well, Pamela, the mood on Main Street is getting darker and darker. These are historically weak numbers. So the University of Michigan came out this morning and said that consumer sentiment in the United States this month plunged by 11% to the second lowest level since records began back in the 1950s. That's pretty stunning when you think about it. This is lower, weaker sentiment than at any point during the Great Recession. The only time it was worse than right now was 3 years ago, back when Americans were panicking over $5 gas. Of course, today, gas prices are low. The problem is all of these chaotic moves out of Washington, the trade war, and of course, the turmoil on Washington. The internals of this report were ugly. Americans marked down their views on the current situation. They're becoming less optimistic about the future. They're increasingly concerned about unemployment. And this is a number that I think is going to get the attention of officials at the Federal Reserve. Consumers are now bracing for a nearly 7% increase in prices over the next 12 months. That is very high. That's a significant increase from the month before. In fact, that's the highest level since the early 1980s, back during that inflation crisis. Keelan, I want to read you about this decline in sentiment from the University of Michigan. They write that this decline was, like last month's, pervasive and unanimous across age, income, education, geographic region, and political affiliation. So this is really across the board. This was clearly a brutal report, especially for the White House, but there's economic implications here too. Consumer spending, it's the #1 engine of this economy. And if people are feeling bad enough about the economy that they start to pull back, maybe they don't take that vacation, they don't buy that car, there's going to be real economic implications. We know that sometimes people tell pollsters they hate the economy, they keep shopping anyway. But if they do cut back spending, there could be significant trouble for the economy. Pamela?
Yeah, I think a lot of us can relate to those questions right now. What do we do? Should we wait to buy? What do we do with our money? And given what you just laid out with the consumer sentiment and the expectation for inflation, could that be why you have several corporate leaders warning that the U.S. could be heading toward a recession or is in one?
Yeah, we heard another warning just this morning from one of the leaders on Wall Street, BlackRock CEO Larry Fink. He suggested that maybe this recession has already started. Take a listen to what Larry Fink said.
Are we going to have a recession in the United States?
As I said on Monday in a talk that I gave at the New York Economic Club, I think we're very close, if not in a recession now. I believe all the uncertainty is really making everyone pause. And everyone's waiting and seeing. And so I think you're going to see this across the board. We just say slow down until we have more certainty.
Yeah, everyone, of course, wants more certainty, but we've gotten a lot less clarity on the tariff situation. We continue to see tariffs go higher and higher to levels that we have not seen in more than a century. The Budget Lab at Yale put out a new estimate where they said all the tariffs that the Trump administration have imposed so far will cost the typical middle-class family $3,700 per year. Just a stunning figure. Listen, I think at the end of the day, the question is, how is the economy going to respond to all of these shocks, right? We have the price shock from the market turbulence, the trade shock from the tariff increase, and potentially a price shock on the way. And the question is whether or not this economy that has been so resilient for so long can withstand all of these shocks at the same time.
Right.
Pamela?
Really quickly, Matt, it stuck out to me, the administration says these tariffs are to bring back manufacturing jobs to the United States. But when you look at the numbers, there are actually more manufacturing jobs open in the U.S. than there are people to fill those jobs right now, right?
Yeah, that speaks to one of the issues here, right? I mean, you could increase tariffs as high as you want to try to incentivize companies to spend more money on factories in the United States. But the question is whether or not there's enough qualified workers to fill all of those positions. I talked to Mark Fields, the former CEO of Ford, recently, and he said even after the Great Recession, they had trouble finding enough qualified workers to work in their assembly plants. And he said that some of the people who did work there, they ended up quitting because they didn't realize just how difficult the job would be. Pamela?
Matt Egan, thank you. Wolf?
Excellent analysis indeed. All right, there's new reporting just coming into the Situation Room right now. We've learned that the Trump administration had private negotiations with China, warning officials there against retaliatory tariffs. But those behind-the-scenes talks evidently did not work. CNN's chief national affairs correspondent Jeff Zeleny is over at the White House watching all of this for us. Jeff, what's the reaction over there after those warnings apparently fell on deaf ears?
Well, if they did fall on deaf ears, but it's just the latest example in the really day by day, the deepening trade war that is underway between the United States and China. Yes, we are learning that U.S. officials privately behind the scenes urged China to not retaliate. In fact, the Treasury Secretary Scott Bessent has been saying that publicly all along, warning countries to not retaliate. Well, those warnings have fallen on deaf ears, particularly with China, as they raised their tariffs to 125%. The question now is which side is going to blink, if either. And Matt was just talking about consumer confidence. The prices are going to go up. There's no question about it. That's what the White House is bracing for. That's what the administration is bracing for. It's one of the big reasons the president had a dramatic pullback on a sweeping tariff plan just a couple days ago. And the market, of course, reacted very well in the moment. But in a couple days since, it certainly has not. The bond market also has not strengthening. So this is going to be one of the central questions here. But Wolf, we're also learning just inside the White House, the president, as he embarks on this 3-month pause on a sweeping tariff plan, there's competing views from his team of economic rivals, if you will. Scott Bessent, the Treasury Secretary, a long history on Wall Street, he is one of the people the president is listening to the most on this, of course. Kevin Hassett is as well. But Peter Navarro, the man right in the middle of the screen there, he is someone who has been very pro-supportive of these tariffs, and the president did not heed his advice this week. So as the president goes forward on this, as the consumer sentiment prices rise, which advisor is going to sort of win out on this? So there's no doubt the president, at the center of all these new trade negotiations, now has to negotiate with some 90 countries or so. So, Wolf, all of this is coming front and center here is the economy. That inflation report, the rising inflation, is one of the biggest challenges, one of the biggest worries for this administration.
And there are so many challenges, so many worries right now. Jeff Zeleny at the White House, thank you very, very much.
Well, Michael Froman is president of the Council on Foreign Relations, a former U.S. trade representative in the Obama administration. He joins me now live in New York. Michael, good to see you. I guess the question that comes to mind is how long-lasting the impact and damage is to the United States' credibility, whether when you talk about the fact that yields have continued to go up on the 10-year Treasury bond, the dollar's going down, everyone's looking for a flight to safety, and it is not here in the United States. How long-lasting is that? I spoke with former Treasury Secretary Janet Yellen yesterday and asked her about the longer-term consequences. Here's what she said. Have foreign investors lost faith, in your view, in the credibility of the United States?
Well, I think they're asking hard questions about the credibility of U.S. policy and what role the U.S. will have going forward in the global economy, whether or not we'll have predictable economic policy and remain a strong positive global force. And we saw that playing out over the last several days.
She also noted that this is an administration that inherited what was described as an economy that was the envy of the world, and yet here we are. What have you heard from global leaders and investors from your perch now and former colleagues, given your time in trade and working on trade for President Obama?
Well, I agree with Secretary Yellen that those are the questions that people around the world are asking. And I think they're going to be looking for a couple of things over the coming weeks. One is, how does the president and the administration use this 90-day pause? Are there a series of bilateral negotiations with the other countries? to reduce the tariffs on a reciprocal basis. What's the end point? If the end point is a 10% tariff that the U.S. imposes, well, that's a 500% increase of our existing average tariff. So that's not a great outcome. That's the kind of tariff that Venezuela, North Korea, Iran have on their products. Those don't tend to be economies that other countries envy. And then, of course, they'll be looking to see what happens in the U.S.-China relationship. As you've discussed this morning, there's a lot of chicken going on here, playing a game of chicken as to who's going to be forced to make the first phone call. China likes these meetings and these calls to be well prepared in advance by lower level officials. And so at some point, hopefully there is some real dialogue, some meaningful dialogue going on between the U.S. and China to begin to sort through these issues so they can climb down from the escalation that we've seen.